good morning and welcome everyone. It is Tuesday, March 5th, 2024, and this is the AgYield War Room. I am, AgYield Marketing Manager and everyone's favorite backup host, Jack Coakley, filling in for Dan today. As usual, if you're old or if you're new to the show, join the discussion any way you can. Post a comment. Feel free to send us an email at info@agyield.com. And let me know how you're feeling today, or if you have any questions for the guys, that's also welcomed as well. Let's kick things off with Johnny with some overnight numbers.
Yeah, thanks, Jack. Good morning, everyone. May corn down 2.5, 427.5. D's corn was down 3, 460 even. May beans down 4.5 at 1150.5, and Nove beans down 2.25, 1144. Wheat was down off the July, down a dime, 557.25. Outside markets, crude a little lower, stocks are lower, and the dollar's kind of unchanged. So,
thanks for that, Johnny. I always appreciate you being able to rattle off the numbers.
Tough job.
I know. You do it so eloquently. Enough rambling from me. We're going to kick off things this morning with Justin, and then we'll work a conversation around the room. So, Justin, take it from here.
Yeah, thanks, Jack. Not a lot of news today. We've had a decent kind of sustained rally off, that first notice day, that last Monday, pre-first notice day low. We were talking about you kind of got up to some moving averages, so you're gonna, you're kind of running into some selling. There's still plenty of producers that need to, sell a little bit more old crop corn and beans, and everyone's nervous about new crop, obviously. So you're gonna run into this kind of selling pressure until something fundamentally changes or we start making a technically good trade. So I think today's kind of to be expected to start off weaker. We'll see if we can prevent ourselves from falling back down sharply. One of the things we were talking about, though, we thought about discussing here was just we're hearing a lot more stories about just the difficulties in the ag banking world right now. So, several banks that we've heard of that are, getting out of, writing operating lines altogether. Some that are getting out of a majority of their ag business altogether, some of the larger banks. And then some that are just purely struggling to loan their clients money, given the current price scenario, given their assets. So it's going to be an interesting, I think, 4 to 6 weeks here on how, some of that plays out. We've had several calls from people, even looking for new banks as their banks are getting out of the business. I'm not sure how widespread it is, but we've heard enough stories now that it could be a factor to some degree, as we go into planting, if there's, growers that really need to find a home, or they may have to do some unconventional things to free up cash, so you may see some weakness in the markets too. That's not typical, just from, the things that I've mentioned here, as far as needing to free up some capital, get their ratios back in line, try to find someone to loan money. I would say it's mostly people with, high percentage of ground that's rented, or, like I said, not enough, asset bases, or just the environment in general, making it really tough. I know if you guys have heard some of these stories too.
Yeah, it's curious to see, think about, okay, how widespread is it, and what the implication would be. Just kind of thinking philosophically on what would happen here. Is it that we need to raise cash going into loan renewal? So it would be there would be kind of an old crop dump if that's the case, where prices fall just in that raising cash, and or is there like a longer term implication where there's less corn on corn acres just because the cost of that crop is so much greater, right? And you'd see a lot more beans on corn just because less dollars in the pot, and it's projected to be more profitable in a lot of cases. What's your thoughts on that?
Yeah, I mean, in the past, I'll say back in 16, 17, 18, when we had, 7 years of just kind of depressed prices where you're always kind of hanging at or below or above break evens. We saw that in years when you had, relatively high bean prices. People would plant more bean acres because it's you only get $1 million. You can plant more bean acres than you can corn, right? So whenever you have to cut back, you try to do every little thing you can to get to that number. So, to your point, a lot of these things that we are hearing too are where maybe they're getting 85% of what they're asking for, which is I found is always even maybe worse in some scenarios because you just do a lot of things wrong, and you still borrow a lot of money. So you start seeing people do anything they can. So it might be a combination of all the above, Dustin. Maybe you have to sell some old crop corn, pay down some loans, stop paying interest. Obviously, I think we've been seeing that as we we're heading into this first notice day. I think that was pretty obvious. To what extent that still remains, or how much more has to be done to get those loans, I don't know. But in the past, we have seen switching to cheaper crops just for that reason.
Well, I would think too, this bear market versus the previous one, that it's going to be a little more difficult, right? There's a lot of restructuring debt, in a low interest rate environment, during the last bear market. And this high interest rate market just makes it that much more difficult, I would think, right? To buy yourself time. So,
I think what happened too is just the speed of the decline. I think a lot of bankers and probably a lot of growers just assumed 2023 was going to be a really good year, right? We had we had high yields in most areas. Nationally, I think it was a record, right? So we had high yields and high prices. Like, it's really hard to lose money in that scenario. And I think the speed of the break, I think the market realizing how many bushels were unpriced, and then it happened not across 1 year, but it happened over two years at the same time in a window between crop insurance. So the worst possible window. So I think the speed of the break, the interest rate environment, like a lot of different factors came into play. And then I think all of a sudden it's like, wow, like how did this happen? So I think like it's a kind of a unique combination of things, especially coming from such a high input cost environment and a sticky cost environment where we really haven't gone down much from the previous year, but prices have declined rapidly. So I think it's a lot of different factors here that kind of happened all at once.
Yeah, it's hard to find a problem in the world too, right? I mean, we've been dry in Brazil for a couple of weeks, 2-3 weeks, but the forecast now is, above average precip for the next couple of weeks, right? Modest temperatures. So there's just not a good story to get anybody too excited.
Yeah, I would add to that too, that managed money is incredibly good at sticking with winners. They'll take a 30-40 cent loss and get chopped up from time to time, but when they're on the right side of a market, they tend to stay on it. And we'll need to see some sort of catalyst to get them a little bit more excited about covering those winners. I was going to point out that when we rolled east to March, we had right at a 23 to 25 cent bounce afterwards. We took March from 470 up to 493, 494. And this bounce is right about the same, about 23 cents in May. Tapping the 20-day and finding sellers should not be surprising, but we're going to have to find some strength, even if in small blocks here. A lot of rumors been circulating that potentially China was in looking for U.S. corn, and we haven't really seen anything materialize on that yet. So, is this a short covering bounce, or is this the beginning of a little bit of seasonal strength? And I think we're in the deciding phase of that right now as the market sorts this out.
It's a good point, Ben. And I think, it wouldn't also surprise me that we trade in a 30-cent range for a period of time, where you get people really excited on 20-cent rallies, really depressed on 20-cent breaks. We could have just find kind of a value area in here too, where you can't really rally too high because there's too much physical corn above the market for sale. Can't really fall too far because there is some underlying demand here, and the funds are ultra short, so they're probably going to be covering some stuff on breaks here. I would think, heading into the growing season. So it could be a frustrating 45 days, until we get some new fundamentals too.
Yep.
We've seen plenty of those markets where they would rip your hair out, trying to get excited on every rally and like I said, depressed on every break. So,
Well, and
definitely.
bear markets too, right? Like it seems that any bullish news discounted for a long time in bear markets. 2012 is a great example, right? Like I think we picked up corn acres. It got in really well. It was extremely dry, but the market was in a bearish kind of mentality for most of that spring, early summer, right? Until finally the market gave up and it exploded higher. So we're coming off a couple years where any news that was bullish was seen as a price move higher, right? We were in a bullish environment. It's the opposite of that now, right? So you really need something to get, to your point, Justin, it could be kind of a dragged out, frustrating, pull your hair out kind of market.
Yeah, hopefully not. Those are boring.
Yeah,
they feel just like they sound.
Yeah, right.
But Dustin did say something last week, which I do agree with. I mean, we are, looking at the positives of things. There's a lot of things that are, stock markets are at all-time highs. There's a lot of money in our system right now. A lot of money still on the sidelines. So if there's a story, I think money will flow into ag pretty quickly because it's relatively cheap to everything else. But that's an if, right? And I don't know that any outside money right now is looking at ags as exciting, but if there was any kind of story, if you look at any kind of, comparison to other assets that have been on fire, we're cheap, no matter how you look at it. So that would be the one silver lining that I do agree with.
Definitely. Thanks again for the discussion there, guys. Ryland, let's jump over to you. Talk a little bit about the meats and livestock and whatnot.
Well, a little bit on the positive side. I know it's all doom and gloom in the grains, but the meats are still doing okay. We did see a little bit of weakness yesterday. It seems like we're just kind of leveling off here in the cattle market. We've been kind of stuck between this range between like 185 to 189. I think the market's really curious how cash is going to develop this week, just with the weather, with how some of the just how some margins are going, packer margins. It's just there's still a big question mark. Kind of feels like the board's done all it can do to try to price it in the best they can. But we'll see it. Like last week, we had that big rally right towards the end of the week. We could easily see that again, just kind of putting it back on. We're in this kind of supply environment where we're going to stay. That's going to still be kind of the favored direction as of right now. But obviously there's some concerns and some caution right now. Just we're not just grinding higher. It seems like we're just kind of struggling a little bit, especially with feeders. As corn has really gained a lot of momentum, the feeders haven't really been finding the support that we needed them to see. So I think there's some concerns there. So if corn's going to start to kind of peter out here, I think we're going to whoop up the buyers a little bit to the feeder side of the market. But overall, it just seems like we're kind of drifting, and all eyes right now are going to be on cash this week. There really isn't too much fundamental news coming down the pipeline outside of the cattle on feed report, but that's not for a couple weeks. So we'll start focusing on that. But right now, I think just the cattle market's really going to be eyeballing how the grain markets shape up, and I think it stands to benefit from a lower grain market right now.
Thanks for that. Looks like we're about just a minute away from the open. Any parting shots from anyone? Any final thoughts to share?
No. I was just kind of add on to what Jason was saying about South America. Safrinha crop is like 73% planted, so the weather's been conducive for that compared to last year, around 56%. I think the biggest question, though, would be acres. With high cost of production and low prices, that's the big question mark. Do they keep with the common rural crops, or do they kind of diversify themselves for profitability? So something to look out for, though.
Excellent. Thank you so much for that. Like I said, just some house items. Again, we are live every day on YouTube, X, and Facebook Live. Go ahead and subscribe to us on YouTube. We do a little bit more than just the live stream here. We do grower testimonials. We do all kinds of video content as well. I'm very excited about a grower testimonial we have coming up in the near future. So be sure to subscribe for that when that releases. And it looks like we just hit the open. So let's go back to Johnny with the opening numbers.
Yes, sir.
Oh, he's ready.
Yeah, I am. May corn's down 1.50 cents, 428 and a half. D's corn's down 2, 461. May beans down a nickel, 11.50 even. Nove beans down 2 1/2, 11.43 3/4. July wheat down a dime, 5.57, and stocks are still leaking a little lower here to start the open here at 8:30. So,
Thanks, John. Like I said, feel free to subscribe, and we'll see everyone tomorrow morning at 8:15 Central Time. Thanks again for tuning in, and thanks to you guys for a great discussion today. We'll see you tomorrow.
Thanks,
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 Jack.
Jack.